Well, yep, that's my bad. That's my bad. Microphone is muted. Welcome everybody. How we doing? Nope, nope. John, you're good. You're good. I had not been talking my microphone. Well, okay, I had been talking with a muted microphone, but microphone unmuted now. How's everybody doing? Doing good. Doing good. Funny day trading today. It's fighting the market. Fighting Intel. Got smoked on Intel. Still holding. I'm only holding though because I was trading SPY all day against that thing, trying to cover my loss. But I think I closed down about 40% after an average down, unfortunately. Should have just taken the 20% stop I told everybody else to. Ryan, what they're gonna do for us, Raphael? Yeah, who cares if December's trash volume? That don't matter. That don't matter. That means nothing. I mean, we got a 900 point ripper in 3 days on the NQ with trash volume. I'll take it. That's plenty. That's plenty for us. I think I think I think how people think about volume just gets a little bit skewed sometimes, at least from uh at least from my experience of talking to people. Low volume does not necessarily mean a bad thing. How I oftentimes describe volume, the easiest way to think about it is the gas pedal of the market. If there's a lot of volume, you're likely going to get big moves a little bit faster. But on low volume, we've all seen trend days all day, big grind up, big grind down on just low volume. That's the way it is. But if we look at our volume bars, I would say if anything, we're putting in some pretty dang nice volume throughout December. We've been low, we were low, low. We were putting in some real low days there for a while. So we've had some plenty of volume. Nick, no, I don't think so, man. I'll keep my eyes on it, dude. I'll split it, dude. Hope we get 25 bucks each. Raphael Crack could be up. Welcome, welcome everybody. How we doing? How we doing? Hope everybody had a good day. Like I said, mine was kind of eh. December's always my worst month, and I mean, we're still gonna put up a nice green month, don't get me wrong, but I didn't want to trade much this month. I really, really went slow this month. Definitely gonna be a little, below my average months, but that's pretty common for me in December. Got this weird thing where I just get burnt out in December, and then I don't know, for whatever reason, January 1st comes and I'm ready to go again. Yeah, man. NBO explosion after hours. Saw that. Already went way up and filled the old gap. That's crazy. Absolute ripper. Yeah. Wonder if Shark's got a runner. That guy's good at just sticking with one random runner and just forgetting about it until it's up big and it's funny. Dude's on that thing. I liked it though. I mean, it was a nice little setup. It's given kind of that breakout retest for minimal risk. Should have the eyes on it, but you can never expect the FDA approval that rips the thing. I mean, I don't know what it's up after hours, but probably the better part of 10%, maybe more. 9.5 where she's at now. GE puts. That's a strong one. Oh, I'm picking up what you're putting down right here. Good for you. Good for you. I just hate to be short at this end of year, but I mean, yeah, let's be real right here, right now. If you're short anywhere on GE, it's right here with the stopover, basically 317. I mean, that's a beauty in all honesty. I like that trade. I will say you're short in a extremely strong name, I mean, um, but We're going to talk double tops on the daily today. I might even use you as an example because that is a sick one. Especially if you got way up there. That's a view. Oh yeah, right at 316. You're stoked. E. Oh yeah, that's a beauty. I would have been hammering that kind of thing. I love that type of trading. I know a lot of people don't, but we're even going to talk a little bit about this today. Okay, let me make one more post here and we will get rolling. Second. Just trying to take a little pop. So welcome everybody. Happy to have you here, Dirty River. Tonight we are going to be talking trading strategies. You guys know I talk all the time about, you got to build your plan. You got to know where your entries are, your stop outs are, your exits, your take profits. In my opinion, in that order, entry and stop out are everything in a good trade. Especially if, I like to encourage most people to focus on day trades, and scalps if they can. Just a bit more safety in that type of trading. You don't have to stare down big, gigantic losses. You don't have to have your capital tied up for days on end. But I also understand that a lot of people don't have the time to sit and trade all day. Maybe you got a job or maybe you just got things going on. So you can't pour over charts all day. So sometimes you do just got to be a swing trader. I get that side of it. But so tonight we're going to be talking not just trade plans. We're going to be talking the part that comes before the trade plan. And so what that is our actual trading strategy. So, most people over time will develop, a nice handful of things that they like to trade around, some ideas that they like to use, something that they've just seen have repeatable results over and over again. Looking for those patterns in the market that just work for you. Again, my normal disclaimer, when I say patterns in the market, you guys know me, I don't trade those named patterns, your bear flags, bull flags, any of that stuff. The only patterns I do trade, double tops, double bottoms, triple tops, triple bottoms, that kinds of thing. And then what we're really going to be talking a lot about tonight, because it is just such an important part of my trading and something that I really just watch for every single day. It's a setup in the market that it presents itself on some stock virtually every single day. So a lot of people have heard me talk about three push wedges. I get tons of questions on, is this a three push wedge? Are you looking at this three push wedge? And so I wanted to talk about them tonight because when we have you know, there is rising wedges, there's falling wedges, those are some named patterns. Those are not the type of wedge that I am talking about. When I'm discussing a three push wedge, and sometimes it's a four push wedge, when I'm discussing that, I'm just discussing something that the market does over and over and over again. So statistically speaking, in most moves in the market, there's going to end up being three legs of that move. You guys have heard me talk a lot about 80% of breakouts fail. I like a triple top a lot more than I like a quadruple top. Because once we start pushing to, the fourth or fifth tests of these levels, that's where we don't really want to be betting against the market. You can short a double top all day long. In fact, I recommend it. You can short a triple top all day long. In fact, I recommend it. When those quad tops come, more often than not, I'm not going to take the trade. Sometimes you're going to be right, sometimes you're going to be wrong. But we're going to talk a little bit more about that as we get into it later. But like I said, we're just going to cover some of my favorite strategies, favorite things to watch for in the market, and how I like to watch for them. And then we aren't necessarily going to be getting into our trade planning, discussing, specific entries, exits, contract selection, nothing like that. We're going to be focused on, X, Y, and Z has lined up. So now I get to build my trade plan around what I'm looking for right here. Because, you'll hear people like me or Lambos or whatever, we're always screaming to you buy the dip. Which we're in a bull market. You buy the dip. If you talked to us in 2022, we were telling you to short the rip because we're in a bear market. So you might hear us talk like that, buy dips, quit, like be a dip buyer in a bull market. Well, while that's good advice, it's also horrible advice because people will take that as, oh, big red candle, I'm gonna buy calls. You need to have a reason to be buying those calls. And so, what that reason is your trading strategy. And so, we're going to talk about a couple of mine. We're going to start with the simplest ones. We're going to talk about just daily trend line bounces. I talk about this a lot. I think every single, my personal opinion is every single trader should be using daily trend lines. The best traders likely all look at them. Shark's looking at them, Tilio's looking at them, Al Brooks is looking at them. All of these people look at trend lines. And so what I've learned over time is those daily and weekly trend lines oftentimes provide just wonderful bounces with minimal risk or rejections, whatever the market might be. So, the quick disclaimer tonight, and of course I'm gonna have to go looking for the trades that I'm looking for and stuff, but I have a couple ideas of where I want to show you good examples of trades where it worked. So of course, we're going to identify ones where it worked. I'm also going to try to find some trades where it didn't work and show the benefits of those kind of on both sides, where, you know, a big part of how I trade, me personally, is being risk averse. So the most important part of that is I want to take entries where my risk is minimized. That's why you guys will hear me never chasing. I mean, don't get me wrong, we all chase on occasion. I will oftentimes have good reason to be chasing. We chased something the other day and made some nice money. So there will oftentimes be, you know, there there's always more trades. So there's really never a reason to chase, nothing like that. And so I like to look for these entries where your risk is small and your potential reward is large. I know that's super simple. I know that's what everybody wants. And I know that if it was easy to do in the market, we could do it all day, every single day. But what I'm looking for is the minimum risk with the maximum reward for that type of risk. And so, you guys have all heard me say a million times, I don't like big trend days where, if your my rule is if it feels like you're chasing, don't take the trade. So on those trend days where we slow grind up and we never get like reasonable pullbacks to pull back or slow grind down, whatever it is, and never get a reasonable bounce to short, or, dip to buy, I don't trade well on those days. I guess it depends how you look at it. I don't lose money because I don't trade. Because if I feel like I'm chasing, I'm not going to do it. So, I'm always going to be looking for the dip to buy or the rip to short. That's just where I feel comfortable. So that's what I go with. So enough yapping. Let's start looking at some charts, start looking at some of these strategies. So we're going to start today with daily trend line bounces. It's as simple as they come. It is the simplest trading you can do. Are they going to show up for you every single day or every single week? Probably not. I mean, if you're one of those people that watches 50 stocks, well, first off, stop watching 50 stocks. But if you're going to, continue to watch 50 stocks, maybe you're going to find trend line bounces daily trend line bounces. But more often than not, you won't. So these are for a much more patient trader. I love these for swing trades. They obviously also help me build my bias intraday as well. If we're dumping into a big old daily trend line, I ain't short. I'm looking to buy the dip. And that can be for scalp, day trade, swing. It doesn't matter. I just know that my bias is going to be long. So this is part of that strategy. we're looking for pullbacks into daily trend lines. Ideally, I like a big bounce away from the trend and then a big pullback to the trend. So the one that we're going to discuss today, and I'm talking about a trade that I didn't take. You can go back and find all of the previous lectures where we talked about this. So what is that trade? It's IBM, and it's one that's going to haunt me for a long time because this is the perfect, when I'm saying I like a daily trend line bounce, I really like it to pull way away from it and then pull back into it, bounce way away from it and pull back into it. So I know where I want to be that dip buyer. And so IBM's a perfect one because it's like, like I said, I kind of got to go cherry picking on a couple of these trades, but I wanted to show you what in my mind personally is like truly A plus perfect setup. And so to me, this IBM trade right here is that. So we have our big trend line. I zoomed out a little bit so you could see, where it started from. We could even go deeper, but this was the major one that I was watching, 2 year long trend line. We had a big bounce pulling up to it, and then we'd started dumping. Well, the big thing that we want to take note of and why I describe this as, to me, a perfect trade. So we knew that these were very major highs. These were all time, I believe these were all time highs. Big double top right there. We can even talk about that. But we're talking trend line. So big double top, bust above it. When we sell, they don't really want to keep us under this 235, 240 level. They get us right back over it. We don't spend very long down there. We get to really set our trend line. Now, me personally, I am looking for the next dip down to this trend line to buy. Don't get me wrong, exploded up. So you can see if you didn't catch it down here in April, you didn't get a shot again until August. So that's what I'm talking about. These don't line up all the time. But when they do line up, they are oftentimes going to provide you a very good trade that can give you a very sizable move. So this to me is the perfect setup. We know 235 to 240 is the big zone, the biggest zone around where we're trading. It's lining up perfectly with the trend line. We've had a big bounce away from it. We have pulled back, and now we have had multiple days of just holding and holding and holding. We finally get our pullback to the trend line. And so again, I'm not gonna, we aren't talking big detail, huge details. Why do I love this trade? So we get a nice little reversal candle. We get a nice increase in volume. We've had the pullback to our daily trend. We're holding the important zone that we want. We know our entry is 240 and the trend. We can know this for days and we can watch it work and work and work and work. We can really take any of these entries. Me personally, I wait for this trend to show up. Sometimes you're going to miss trades. Sometimes you aren't going to miss trades. This entry is beautiful. We're looking to enter around 240 right at that trend line. Our stop is going to be a break of this trend and a sell under 237. So right off the bat, we know we got $3 risk on the trade. No big deal. We know that our very next target up, our next major target up, for me, going to be this 246, 247 zone. So we're risking 3 to make 6 or 7. No brainer, one risk, two reward trade. Perfect trade for a swing trade. Perfect time to be day trading, scalping this name. This is an entry that I mentioned it because this is actually something that me and Viral, I'm sure a lot of you guys have talked to him. He talks a lot. He's a great guy. This was one we talked. This is one he took an entry on. This is one that had I been paying attention on this days, absolutely an alertable trade, a very, very tradable trade. Look for this setup in the market. Pull back to your strong daily trend, holding a major zone, multiple days of consolidation at that major zone. And this is a strategy that day in and day out, over and over and over again, will work for you. Start looking for these, start identifying these, and the daily trendline bounce is one of the greatest low risk, high reward trades that you are able to find yourself in. Again, I went picking and choosing to find a good one that worked, obviously, just to really show you guys exactly what I like to look for. It's super simple, we have our normal support and resistance. We got our trend line. That is identifying our entry for us. Does everybody see what we're looking at here? Super simple strategy and one that works time and time again. Okay, based on no questions, we're gonna keep on going. So the next thing that we're gonna talk, and this again, wonderful swing trade entries, as well as working very good. Okay, yeah, great question. Thank you. And so I just want to say it was weird for me to get no questions. Normally, people always ask questions. For anybody who's never been in my classes before, I don't know if there's any of you in here. I am here to teach. If you have a question, ask it. And if you have a question, I can almost guarantee you there is somebody else in here with the same question. So when I draw a trend line, and this is actually a great one to give you the example of. So there is at all times going to be many trends working in the market. You know, some of them are going to be major, some of them are going to be down low. Some of them might just be like this. You might be looking at a little, formation like this. So there's going to be a lot. These trend lines that I am talking about right now, you want to encompass a lot of information in them. And so people, when they teach trend lines, you'll hear people trying to teach, oh, you need this many touches or you need blah, blah, blah. What makes a trend is, and we're going to be discussing uptrends, so you have to think of the exact opposite for a downtrend. We want a major low. So that's what we have right here. I'm going to call this a daily double bottom right here. This is our major low. We are going to draw our trend line from this major low to our next major higher low. So if anybody doesn't understand what a higher low is, you can see this is a low after a big pullback. It is higher than our previous low. It's really that simple. Me personally, I always draw my trends off the wick. That's where, and I like to start it on the candle where the trend actually started reversing. So I go from wick. Here is our next wicks on these candles, and then we just drag it on up and you extend it out because trends will continue to work. A trend is a trend until it is not. And so we just want to go from our low to our next major low. As I said, you could have been watching this, which was perfectly valid. Maybe you waited to draw a trend until here. Also perfectly valid. For me, when we came back to IWM and we were looking at it as it was trading somewhere up here, because this is where I was drawing my trend, this is the trend that I was watching. So like I said, there can be a bunch of them all over the place, but when you're looking for these big volatile bounces, you want to look at the trend line that encompasses the most information you can. So this one, for example, started June 4th of 2024, and we were buying the dip to it September 2nd of 2025. So, over a year later, we're buying the dip onto that trend. Do you get that? No more questions there? Okay, if we got no more questions. So next one I'm going to talk about, this one's going to be funny to a lot of you. Do I like finding the trend on the weekly? No. I won't say no, but I like it on the daily more because you have more fine detail. Don't get me wrong. This wick that I'm drawing is also, it's a wick on the weekly. So you can do it that way. We know that these we know a dump like this that bounced. We know that weekly candle closed with a much larger wick on the downside, or closed green or whatever it was. Uh, and so this is, and so, on the weekly, it's fine, but, uh, I prefer the daily for a little bit more info. You have a bit finer detail, I should say. Okay, you got it. If you do the trend line early, it looks like you would have stopped out at some point. Is that just the name of the game? Yep, absolutely. So, and thanks for asking this. Thank you. I like getting questions. Okay, so let me get a little more time again. So I'm assuming that you're talking about, well, as I zoom in, I honestly don't really like these trends. Like a trend like this. I mean, yes, you got gapped down on, you got wrecked. Oh, it's earnings. So, I probably would have told you to not swing that one. Let's see if we can find another one. I mean, he could have even, could have even been this one, I guess. And here we go. So never really gave you an option. Remember how I said I like it to pull down to these things, give you some consolidation by it? We never really got the opportunity. I will say the reclaim of it, reasonable enough, but not really any trades here, you know? You can be using it for your short time frame biases a little bit. You know, you could even have this little trend here. You break it, you get your retest. But when we're looking for these daily time frame bounces, just to go back to, our example, and again, it's a perfect one. I want you to see perfect. They're rarely going to be this perfect, but this is what you shoot for. Pull down to the trend, bounce some consolidation into the trend. This is the setup. So no, great question here, Nick. Again, we weren't going too much into trade, planning and management, but no, because for me, I am always going to keep my price targets reasonable. If you're buying down here at 240, and if you're a share trader, it's different, but for options, you're buying down here at this 240 zone. Maybe you're looking for 266 as like your top. And then if we get into the gap, you can start to look for a new trade. But really, you want to be looking for a move from your lows to your recent highs. And to me, this is your recent high under that gap where, we tried to bounce and then ultimately we sold. Let's see. If I do the trend line early, I'm still trying to figure out where you were talking about, not fancy, sorry. So daily trend line, my favorite for swinging, but I use them intraday. Um, oh, you sent a chart, dude. Sick. Well, I don't know what you're showing me here, though. I don't, yeah, okay. Um, yeah, well, I gotta be honest to you. I would also hammer this one, but I would be aware that this was much more risky. This right here, though, is where it just becomes beautiful. Market has proven to us for a week that it wants to hold this, So we can look for that trade. And so for the daily trend line, great for swings, but I will say when it breaks, and you need to admit you're wrong. Just because this is the greatest entry ever in my eyes doesn't mean you're going to make money, but it means we've done everything in our power to identify the spot that we want to buy. We've seen buyers show up or we want them to show up. We've seen charts hold where we want them to hold. So we take the trade. As with all trades, nothing is ever a guarantee. What makes this one great, as I said, $3 risk for $6 upside just to your first target. Even more, $3 risk, $6 to your first target, $15 to your second target, and then what, $26 to your third target. And you don't necessarily think it's going to happen in 2 weeks, but very little risk for maximum reward. Oh yeah, well, where'd you draw that one from? Like here? Let's see. Oh, or here. Um, yeah, totally. I mean, so you drew it out. I'm thinking you drew, yeah, connecting to this one. Well, realistically, this one absolutely printed for you. You also got to sell down right around a strong level, dip to buy, target here. Ultimately, you got saved by an epic gap. This one, you were never given an opportunity. We're what, we gapped and we dumped. Right here, no consolidation and holding over that trend line. This one, you could almost buy it here. This one, if you bought the reclaim, you got wrecked. But again, by this point, this trend has been identified. That trend has been identified. Yeah, Crash Miss, this was a sick one. Viral hold it like to like 300 or something. He's insane. What do you like, two trends on your chart? No, but so okay, well, just for an example, sometimes I swear I got an ugly one. Sometimes yes. Sometimes every ugly chart just stays, or every ugly trend just stays on there. But no, because most of those are no longer valid. They've been broken too many times, things like that. They might finally come into play in a long time and we can redraw that trend later. But for nothing more than clearness in the eyes, you know, and an easier to read chart, I like to say there is my major trend, you know. Yep, there's my major trend. And like you could even like, you know, you can always draw top trends. And maybe at this one, but you know, this one hasn't come into play yet. Could come into play, but when you see nice little three tops, you know, you can start to look for those. Okay, so on to our next little strategy. Super simple one, funny one because I know people are in here. Funny one because it might not work out, but let's talk about it. So Mara, um, you know, I know a lot of people trade this one. It is no secret I've been wildly bearish on these names for the last 2 years. Overall, it's worked very well for me, but I love a trade like this where something is absolutely torched. But it's coming down into a big strong zone. So what we're looking at here is we know this, you know, way, you know, back 2023, it looks like end of 2023, this little 970 to 1070 zone, even a little higher if you want, was difficult for us to get by. When we did get by it, we exploded. When we did go below it, we tended to sell. When we got above it, we exploded. When we finally came back to it, we exploded. So now we know this is an important zone. We know there's likely a bunch of liquidity here. We now have my favorite personal swing setup in the market. And then, you know, this, of course, we treat all charts the same. We love this on the daily time frame. We also love this on the short time frames. So right here, big old daily triple bottom. Even if you weren't looking back that far, big old daily double bottom. To me, this is some of the best risk reward trading you can do on the market. Statistically speaking, you have a very high probability of doubles and triple bottoms at least giving you a bounce. It's why, you know, the H pattern, I think, is one of the more stupid patterns on the market, you know, because you're shorting a double bottom. And a double bottom will almost always give you a bounce. So you guys can go back. I put these circles on here. You can go find my post and trade floor. We we stay under 12. We're going to 970. I missed the 970 bounce. And now we're at that 970 bounce again. This, and again, this is super simple. This is super cut and dry. Double bottom on the daily, you buy it. Or triple bottom, whatever you want to call it. So very cut and dry. We know where our bottoms are. We buy when we hit that price. At 970, we're a buyer on Mara until the market proves us wrong. The beautiful thing about double bottoms and triple bottoms and what really separates them from other patterns is a double bottom is a double bottom until it is not. You know, it is a double bottom until the bottom breaks. The issue with all other named patterns, a bull flag, I mean, beyond the fact that they have a low success rate, and we've all seen a million bull flags break to the downside, a bull flag is not a bull flag until it breaks out bullish. A bear flag is not a bear flag until it breaks down bearish. So it is nice to have a pattern in the market like a double bottom that is the pattern until it is not, as opposed to it isn't the pattern until it is. And so again, for me on Mara, and you know, picking and choosing, but it's one that a lot of people trade. This is a no-brainer. And I hope that people were buying Mara at 970 a couple of days ago. Obviously, you know, a little pullback today, but off our 970 level, you got an 11% bounce. So even if you're just a share trader or share scalper or anything like that, these things can provide very, very volatile moves. So the other side of it, and you guys know, I like low risk. So realistically, we know if we start looking left over here, our next major support is going to be down here about 913. So we can trade this one of two ways. Our wide stop off our 970 is going to be about 60 cents a downside. Our final ultimate target is up here at 12. So we know that we're putting on about 60 cents of risk for what, $2.30 of upside. That's a trade that I will take every single time. I'm not saying you shouldn't be trimming contracts, things like that. Obviously, you get an 11% move, you get a, a full dollar move on some Mara contracts in a couple of days, you're up big on those. So obviously you need to be managing the trade. Don't just try to hold it all the way to those highs. Take some money when it presents it to you. But this is my favorite pattern on the daily time frames that's super easy to identify, super easy to make some money on, and has a very, very high success rate. Also works very, very well on the shorter time frames as well. Anybody who's traded in VC with me knows we trade double tops and double bottoms virtually every day at some point. I'm talking about the individual names because doing it on the ETFs definitely takes a little bit more effort, because they move by the big names. So if the big names are breaking out and you're coming into a double top, you probably don't necessarily want a short SPY when everything else is breaking out. How do you look for consolidation above the trend line before an upside entry? I just no set amount of days. For me, you're still talking IBM, so we can at least go back and look at it. So you can see here, it consolidated for days. Maybe you were buying this 240. This is, like I said, just sets up to the perfect entry where you're going to take it at 240 at the trend. It's just a perfect setup. But I don't care if it consolidates 2, 3 days. I might take that early entry. I'm also the type of trader that when I catch the $6 bounce, I'm going to take my money. And if we pull back again, I'll happily get in there again because it is still there. Yes, I do that's what yes, good question there. It doesn't matter the time frame and it doesn't matter the chart. This is something that I always try to teach people. I don't care if you're charting Apple, AMD, AT&T, Mercado Libre, none of that matters. You treat every single thing the same and you look for the same repeatable setups on those intradays as well as the daily time frames. You just always want to be finding those. So we'll start getting into shorter time frames. But again, everything we've just discussed here is something we can apply to short time frames, long time frames, doesn't matter. These are some of my favorite swing setups, but these are also, we'll use IBM again, or even Mara. We can even use Mara again as the example. When we're setting this double bottom, you know, I and watch Mara absolutely dump tomorrow, and you guys can all tag me and make fun of me. But right here, I wouldn't take a put on Mara for free. I'm a dip buyer when we're this close to 970. That's all I care about. Is there scalps intraday and that kind of stuff? Yes, but this setup on the daily gets to help me. Yeah, okay, there you go, Andrew. Um, uh, uh, this setup on the daily helps me build my bias for the shorter time frames. So we know double bottom bounce likely. We want to be looking bull. So we continue to look bull on Mara. That doesn't mean we're buying every single green candle. Like you don't, or every single red candle. You don't just want to be hammering this thing on the way down. You want to wait until you are presented an opportunity to trade it. Like right here, break at 1017. I'm perfectly fine with you wanting to short Mara right here. It's broken below our level. We've retested it. We've consolidated, and now we're pushing back down. Perfectly reasonable short entry. Up here, we're just in no man's land. So if you're long, you can of course try to stick long, but don't let the market just dump against you. Trade some shorts. Okay, so next, moving on, unless we got any more questions. So next one that we're going to talk is three push wedge. And this is going to be, maybe some of you's first like introduction to the three push wedge. And we're going to talk about a slightly longer time frame one. This is a setup that I did take and that I did trade. It's kind of a pain for me, but it gets to show a bunch of my favorite things. It gets to show a bunch of my favorite things. So Amazon, hourly time frame. Again, three push wedge. You guys have all heard me talk about it. Market likes to move in threes. All of this plays back into all of the market statistics, and it's why, I don't know why, but people always want to short the things after they've dumped 30%. They don't want to short them at, big resistance. They want to, I haven't seen that in a while. They want to short them after the dump, and so this is what we look for. Is there some spots to be trying to buy the dip on Amazon? Yes, but this is a trade that I actually took. I don't remember if it was Avenger was in there. It might have been Always Be Winning was in there with me. And it ultimately gets to show kind of two of my favorite. God, dude, that picture. Um, it gets to show you two of my favorite setups. So three push wedge on a longer time frame. We know we are looking long here. The second part that I really like of a three push wedge, and this is one that I didn't trade well. It did work out for us, obviously, but it's one that I really didn't trade that well. So I bought Amazon for the swing off of big 222, 223 zone, three push wedge. A three push wedge is a reversal pattern. When we're going down like this and we get, we have our first touch, then we've got our second leg, now we've got our third leg coming into this trend. Statistically, we want to start looking for a bounce. So now we look for some of these longer time frame candles to maybe show us a bounce, like a big old hammer, things like that. So I got an Amazon to long swing here. Got ugly in those after hours. Knowing my stop's really going to be basically daily close under 222, 221.30 zone. I'm buying at 222.50. I'm giving it basically a buck's worth of room. And then my targets are up here, our 224s, our 225s, and our 226s. That's it. Nice little one risk for maybe $3-4 upside. Really, really effective trade. I will say, and I did say, I traded this one poorly. You guys will see three push wedges all over the place. I'll show you a couple more examples here in a second. My favorite thing is when we have a three push wedge that we try to get the bounce and then we set a double bottom. You guys know I love double bottoms. I love three push wedges. These are two of my favorite patterns. So when we can get them both together, that is the real ideal setup. I'm going to take this ribbon off just so we don't have to look at it today. That is the real ideal setup. So we have our three push wedge. We are now looking long. Well, we pull back and we bounce. This is Amazon OpenAI deal. And then we pull back again. What do we have right here? We have our double bottom. This is what we want to buy. I know Amazon was looking ugly. Obviously, if we go to our daily timeframes even, we can see. We know where that base is. We know where the buyers are showing up, over and over again off that 221.30. So we're on our hourly timeframes, ugly close on the day, and ultimately, ultimately we get this really, really nice double bottom right here. This is a trade I take every single time. This is my favorite trade in the market. Three push wedge into any sort of double top or double bottom. Does everybody see what I'm doing here? It is super simple. I do actually want to add in a side note. This is probably a little bit more advanced than people really need it to be. And people are going to laugh at this. So I want one of the legs in my wedge. It looks like I almost even could have drawn it a little bit different, but this is what I had drawn. I want one of the legs in my wedge to get outside of it. So, we have our test here, and then we have a few candles trying to break it. I like this because it is the market. We get to visually see the market playing with the statistics that I teach. It's proving that it wants to hold this trend. So we get the bounce. And then we ultimately set the double bottom. Like I said, this is my favorite reversal setup in the market. No questions asked. I love identifying them on these longer time frames. You can see this trade took 4 days to set up, 5 days for it to set up. And then when it did, we ultimately got that nice reversal. You guys know me, I didn't hold for the whole thing, of course, but we ended up running off that 221 level. We ran 8 off of it. That is all that we need. Then we even get to go to our daily timeframes and say, not only did it give us our nice triple double bottom, however you want to look at it, bounce, now we've got the new trend line where we can be looking to be dip buyers above this trend for the break and retest trade. We aren't talking that tonight. But so does everybody get that? Three push wedge and then three push wedge into a double bottom. It's the bread and butter for me. Oh, there you are. I was talking about you. We were talking IBM earlier. Okay, nothing there. Okay, so next one we're gonna talk. This one's a little bit different. Um, uh, oh no, I did see it. So, let's see. Oh wait, no, sorry. SPY. I had to look at my notes. So, SPY. You guys know I trade this one all the time. I wanted to show you another example. This is another longer time frame, three push wedge. Uh, very, very similar setup yet again. So first leg down, second leg down, third leg down with, um, you know, third leg down with the overextension. But the thing that I want to point out here is we are given two signs of potential reversal coming. So you can see we had our nice longer time frame three push wedge setup. Now, if we go to our shorter time frame, and remember I told you I don't care what chart I'm looking at, what time frame I'm looking at, I'm looking for the same things. On our wedge, like our hourly wedge, we also have the intraday three push wedge setting up right on top of our hourly wedge. This is a beautiful sign that the market may be bottoming, maybe topping, doesn't matter. But worth it to jump in there on that long swing. Obviously, you don't know that this is going to happen. I'm sure that was data, but the risk reward greatly favors you trying to catch this bounce. We can see it setting up really nice on the hourly. We see it setting up on the 5 minute. And then if we zoom out to our daily and start looking left, where do we think we're going to bounce? You should be thinking we're going to bounce on top of all of this stuff over here. And where did we end up bouncing? Right on top of all of this previous stuff over here. So they're money. They work time and time again. I'll point out today, here's my chart from today that I was trading. Here's a little micro one. Three push wedge. I obviously didn't catch it. We did catch a short down. But I obviously didn't catch the bounce. But little micro one, little three push wedge, three legs. One of them even went outside of the trend. Love it. Right up high, three push wedge. I mentioned this was a nice little pair there in Pro Trade Floor. I know. Three push wedge on the highs. We get to send it right back down. We aren't necessarily looking for some gigantic reversal. Oftentimes you will find them off of those kinds of things, but we're looking for nice little scalpable or day tradable moves down. And you will find them all over the market, all kinds of different stocks all the time. So when I'm looking at, so it depends. When we're trading like some intraday double tops, double bottoms, I want them pretty dang close. If we're on the daily time frame, if we're off by a little bit, I'm perfectly comfortable with it. Even if it's a little poke under, I'm perfectly comfortable with it. But not too far. It doesn't matter, short or long time frame. If you're too far, then your double top or bottom didn't work. Don't get me wrong. Sometimes you will, like you can see here, these two are pretty dang close. This one had you scared for a second. It was dumping. Ultimately, they bought us back up and held that, double, triple bottom, whatever you want to call it. You can see, is there a, there's a between this one and our trend, there's a 20 cent difference, 15 cent difference, but I wouldn't really want too much more than that. A big part of that pattern is that sellers or buyers were right in that zone before, at least once. So you want to see if they're there a second time. Never, Nick. For me, I never do. I always use the wick. The reason that I use the wick, and you can see sometimes my drawing's like not like perfect. This was supposed to be drawn right off the bottom, but it wasn't. The reason you want to use the wick is because that is where buyers or sellers lost. You want to know where one side gave up. That's where volatility comes from. Volatility comes when wicks start forming because we know, okay, this is the last attempt for bears. They either break us down or the bulls are about to show up and try to take control. Same as up here, we've got wicks, we've got wicks. We finally get another wick and we say to ourselves, hey, if bears are going to show up, this is where they're going to show up. So I always use the wick personally. Oh yeah, use them long time frame, short time frame, mid time frame. It don't matter. I used to know we hit a three push wedge on a weekly chart one time that gave an explosion. I can't even remember what it was now. Uh, uh, okay, so those are my main strategies. What I just taught you guys are my main strategies. I do want to show you and discuss one more thing. That it's simple. Again, we're picking and choosing. to, show a really good example of it. And it's one that I was trading a little bit when it was going on. So the other thing that I like to trade, these are my reversal patterns that I like to trade, bounces, rejections, that kind of stuff. 9 times out of 10, I'm looking for double tops or double bottoms at major levels or three push wedges. That's what I'm looking for day in and day out, and it works for me. So most of I love trading in ranges. I'm always going to try to identify a range early, and I'm always going to be shorting the highs of that range, and I'm always going to be shorting the lows of that range. So I love to identify the ranges on, let's see, for the SPY wedge intraday, how can you get confirmation of the rip or the dump? You can't. But what you do is like, just to show this as an example, and I hate that it's SPY. Pretend it's not SPY. Pretend this is an individual name because there's so much more going on with SPY than just SPY technicals. So for sake of argument, say this isn't just pretend this isn't SPY. The close of this candle right here is your entry. That's what you want. We've seen our first push, we've seen our second push, we've seen our third push. So now we've closed under the trend. Now this is where we take our entry. We also have a bearish candle, closing above its open, but closing below its midpoint with a big wick on the top. So we can say to ourselves, this is a bearish candle. It's not always going to work for you, but we can say, okay, that's a bearish candle. We now know, here's our stop. If we're going to start buying and break above this, then that likely means that our three push wedge is going to fail. So any strong buying is how I'm always going to describe it. If candles start ripping above here, I'm likely going to take the stop. As I'm looking at this one, I would obviously hold to our next level up. It's only 50 cents, and then ultimately we're looking for the opening range high. That's just something I trade, but we're looking for our next intraday support when we start selling, which is going to be down here, our 684.50. So really, this is your entry, and stops are really any strong buying over this candle or a candle close over 685.58. That's how I would trade this one. Same as this one, we get our 1, 2, 3 push down. I missed this trade. Like I said, we were short for this. And then this candle closes. I'm likely going to buy the close on this, and I'm going to run my stops down here. Always all about those tight stops, looking for, minimal move against you, maximum move for you. So do you get that? Hope so. So next one we're going to talk range trading. This 50 EMA is just the 5-minute, whatever, normal 50 EMA. So whichever one we're looking at. And then obviously I took our hourly 20 and VWAP off for this lecture. We're just talking about price action identification. We start to use those EMAs and VWAPs as, additional confirmation targets, things like that. So final one we're going to talk, Pepsi and a range, because anything, we want to identify perfect. So this is like hands down the most perfect range that I've seen the market provide us on any individual name in a long time. And it lasted, actually, we was that CCL or NCLH? That was a nice one too. But this range right here, we all wanted the breakout. Everybody was bullish on Pepsi, or at least I think everybody was bullish on Pepsi. I was. But it took forever, well, ranges are beautiful. Not only do they give you very defined entry points, they give you very defined stop losses, and they give you very defined take profits. So I love ranges. And not only do I like trading intraday ranges, I love trading daily time frame ranges. You can see right here, we identified this range very early. This was my major level 129. And then we can just say, we know this is the strong resistance. So we have our range here. We know anytime we are pushing up to this 132 zone, we want to be short. So you can see countless entries short. And where's our stop? 132.79. Anytime we push up to the 132, 132.30, we're short with stops over 132.79. On the exact opposite end, anytime we push down to this 129, 129.20 zone, we're long. We're long. And our risk is a little wider on these longs, but we know our overall bias is bullish because we're consolidating and holding strong support. So we're buying 129s with stops under 128. So we got about a buck risk on these things to the downside. And we use this for intraday. If we're selling down and we're selling down and we're selling down, we view this as a buying opportunity and we wait for daily closes. This is my favorite thing to trade on daily time frames. I know that everybody wants to catch the big old breakouts on their swing trades. Not me. You can hold your Pepsi swing trade for your month and a half and finally catch your breakout and make some nice money. But when we've shorted here and we've longed here and we've shorted here and we've longed, here and we've shorted and we've longed and we've done this and over and over and over and over and over again, and then maybe we're long for this breakout, but let's just pretend we are. Well, my 8 trades right here likely made you more than the 15 buck ripper on this. With more safety, without getting chopped for months, without serious impact to your opportunity cost. This is great trading. When we take the breakout, you can buy the dip, and of course, this is an earnings gap, so it's make believe pretty much. But this is perfect and easy and stress free. Everything is defined. This is the greatest, easiest trading that there is. It also shows up in shorter time frames. I love to scalp a little range on SPY. I even said it today that I took I took this short, and then I wasn't around for like any of this until I don't know, right here. I missed like this whole little zone right here. I love this. Like I love this kind of trading. Like you buy 685 calls at 684.50 and you buy 685 puts at 685. It is so 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 easy. And that's what I wish people would do all the time. Yep, exactly. Intel did it too. Yeah, and I teach it, and like everybody tries to criticize me for like trading trading ranges all the time, but it's like, you guys, this is wildly, wildly easy trading with low risk. I mean, when like this type of stuff, there's so much money to be made right there that maybe you finally have some finance contracts, but we also don't care. Like, I mean, God, I'm even looking at Intel right now. Um, I probably would have just done something like this and like, yeah, buy it every time it touches like 18 or 19. You are going to make money over and over and over again. And then maybe you get lucky and the US government takes a stake in it and you catch the explosion, or maybe that happened before, I don't know. But identify ranges and trade them. And that's my trading right there. Double tops, double bottoms, three push wedges. That's what I trade day in and day out. You guys got any questions? We got a few minutes left. That's all I got for you. If you got any questions, let's talk about them. Hmm. Man, measured moves are tough. Um, Intraday depends what you're measuring. Don't love them. I know that's like sacrilege to the Brooks believers like myself. Don't love them. Intraday or longer time frames, daily time frames, things like that. Absolutely love it. Absolutely love it because they work. These like even like, well, I guess this one's hard because it's exploded, but long consolidation, you will find those measured moves. And oftentimes they can be big. Oftentimes they can be a nice solid move for you. But intraday, man, I don't love them. If I was gonna do it, I would do and this will be funny to you, but I love the Brooks opening range. We spent a lot of time inside of them or grinding right next to them, but oftentimes run a fib extension on the opening range and look for like a 50% bounce out of it. That's much more likely than getting the full measured move. These, especially for the last couple of months as the AI trade has really lagged, those we've had some very nice trend days. Don't get me wrong, but for like individual names, they've been way better than any of the ETFs. You'd have a much higher likelihood. But try using some fib extensions on there, and you'll start to do a little bit better. Would I look at ARM? I haven't looked at ARM forever. Ooh, ooh. Well, I mean, I think you got it. Yeah, they might poke a little more off of there, huh? It is the setup though. I mean, it's looking like it wants to go down, but you gotta wonder, is this the double bottom? Is it just not gonna find its way fully to that wedge? And is this gonna be the double bottom for the reversal? I mean, I gotta be honest, I'd be long in there. I'd probably be long in there with some room to add at 110 if it shows up. Nice little setup though. Nice little setup. Where's its top trend? At least for a move back to those 120s. Big zone. I mean, you kind of got to be a buyer. But I won't be entirely surprised to see a little more push down, but I'd probably be long here, but maybe some room to add at 110 and then your stops under 107, something like that. TEM too, huh? Yeah. I mean, we know that 60 is just massive. That was probably the spot to buy. Massive resistance, turn massive support, pulled back into it. Could probably almost make an argument for a little wedge bottom here too. Now that's a reversal looker. Hate it. I mean, not here, not today. Today's just the day you're mad that you didn't buy when you should have been buying. But beauty. I mean, you got your big bounce up, you got your pull down, you got some consolidations with the ultimately giving you the bounce off the trend and the attempted pushes outside of it, and then the final pull down right there to be in there for the long swing. And that would have been a money one off 60 on 60 around at $6 in a day. That's wild. 10 percenter, 9 percenter. Um, you pull up the active trader, and so wherever, let's see, we're at 65. So here's our bid. Well, our mid rather. Here's our bid. It's the green. If you set your order on the active trader below the bid, it sets it as a market order stop. And you'll get a line on your chart to show you where it has to hit for that to pop up. And so, well, you can actually, I guess I can kind of do the example. So you can even see, oh wow, that thing exploded in after hours. I didn't know that was going on. Is Intel up? Wish. So you can see even on the active trader, it will show you where your line is. If you do this, it won't move the line that easily on options, but when you place your order, it will show up on the chart. That's why, in like voice chats and stuff, you guys might hear me say, "Well, take the stop at $36 or whatever." It has nothing to do with it being $36. It has everything to do with where my line on the chart is. In between the highs and lows, I mean, so you're asking what were we just looking at? Or let's just go to SPY. You're asking, do you trade in here? Do you just wait for that? I trade in there. Most people would just be way better off just waiting for that to come back. Like patience is the key. Or I guess that arm one was nice too. I think it was arm. Um, oh no, it was the TM one was nice. So can you trade it in here? Absolutely. Should you? That's up for debate. If you sit and you wait for these kinds of things to set up for you, you'll have much less heartache when as opposed to trading. Don't get me wrong, is there some breakdowns to be traded, some breakouts to be traded, rejections to be traded? Absolutely. But you don't need to trade everything the market shows you. And if you just sit around and you wait for some nice three push wedges to show up and that's all you trade is three push wedges on the daily, you're going to take way less trades, but you're going to have a pretty good success rate on those trades. So really, so great question about entries and stops. Here's the thing about a trade plan. Um, a trade plan has three things. It's got your entry, it's got your stop out, it's got your take profit. We talked about it a little bit earlier. In my opinion, that is order of importance. Anything that happens between those locations hitting is noise. You know, where people struggle with that is, and we can go back to what was that one I just said? So ARM, we'll just build a super rough trade plan, okay? We're making it up as we're going. We bought this, okay? This is our double bottom. We know we didn't fully hit the trend, so we know we might be in there a little bit early, but we know that we're going to stop out. We'll leave some room to add at 110, and we're going to stop out on a daily close below this 106. I'm not saying this is like a great trade plan. Really, we should be buying down there, but for sake of example, that's what we're going to talk about. We know where our stop loss is. So when that comes, we act. Don't be the person that says, "Oh, I'm going to stop out on an hourly candle close under this." And 6 days later, you're in a trade that's had 20, 30 hourly candles closed under a level. You need to follow your rules, but you need to understand that anything that happens between your stop out or your take profit, it's all noise. Once you have clicked buy, you do absolutely nothing to your position unless it's part of your plan. So, say we buy here, we plan to add more here, and we plan to stop out here. Well, we enter here, we buy more here. When this shows up, we stop out. No questions asked. Everything is noise until it's not. CRM, I haven't looked at that one. Ooh, ooh. Well, you know me. I mean, I would not be long here. If you got long back here at 254, I'd be loving it. But currently, you're long into a triple top. I will say that is strong. Look at here's where we this is where me and you talked it before. River said buy CRM. Nice. That one obviously worked. But now right back up to that danger zone. 266, 270, risky spot. We get over it, it'll get to run it. But beauty from down there. But yeah, 270. I see 270 coming soon. I don't disagree, but I know that I would be getting down to runners at 266. Oh, you added at 235 at the spot. Look at that's where we said to buy. You added back here. Duh. Yeah, you're good. Yeah, you're good. You're good there. Snap. Oh God, here we go again. Are we really gonna do this again? This is where you got me long last time, I think. Wow, it actually is looking not half bad. That's not actually looking that half bad. Where was the alert on the retest of the 750? Yeah, but eight, it's probably gonna get smacked down again off of eight. But if it gets over eight, I'd actually take that entry over basically like 810 too. You took them last week. Yeah, thanks for the alert at the yeah, get you you can alert me after the 10% pop. You can't alert me at the big old daily triple bottom. I don't know nothing about Fig.
Hey, River.
I see it dead, that's for sure. I see it dead, that's for sure.
Yo, River.
Oh, JT, how we doing?
What does IWM look to you?
That it wants to run. You know me. This is my zone. This is all I care about. As long as we're holding above our 253, dude, we stay long and strong. My bias is bullish on these things into year end. I think tax loss harvesting gotta be tax loss harvesting gotta be wrapping it up here. And I think, I think we're seeing, remember how I told everybody we want to start to see this volume increase into IWM? We're seeing it on the last few days. We also want to see the volume increasing on RSP, and we are not seeing it yet. But once those two start waking up, RSP obviously good day today, but on lower volume, reducing volume. And you don't necessarily want to see the reducing volume on the bounce, but we like seeing this nice, increasing volume on the bounce up. We like that. I'll be hammering this thing long at 253 if it shows up. But you're the IWM goat, JT, so
Man, I kind of picked this strategy up from October,
yeah,
but the range I have is between 251.10
yeah,
up to about 252.60.
yeah, it's perfect.
And yeah, if you see that over the past couple of weeks, it's just been paying in both directions
Yep,
uh,
yep.
for that.
And
Yeah.
that's even you can see, I mean, I got 251.35. Shorts off of there have been money, and then any of these dips down, we know our 247 zone, we want to be dip buyers on that thing. That's like Shark, that's where Shark longed it. Then of course by that pullback 248.50, your stop's only a buck 30 under you, and so you swing it again. That's what it's all about. But you've been crushing those things, that's for sure.
I try.
Yeah, dude, you're doing great, dude. You got Sensei. I don't know if he's in here tonight, but dude, he doesn't talk much in lectures or VC or anything, but he hits the DMs pretty frequently and did. I mean, basically every day. I think I even got one today. Every day, like a few minutes into the open, I'm getting the like, oh yeah, 6:52 a.m. But that's 9:52 East Coast time. There he is sending me a screenshot of him cashing them IWM calls. So you definitely inspired him too. He's been loving it. He's been loving it.
Cool.
Yep. Okay, well, that's going to do it, everybody. Thank you all so much. Oh, I forgot to talk about Fig. That's my bad, girl. It looks horrible. I don't know what you want me to say here. I mean, I don't know how much worse it can get, I guess is one way to put it. Once, once all there is sellers. I mean, this is big. Actually, a break back up over this. And I'd honestly be looking to maybe see if you could. I mean, it's probably not breaking that trend on the first attempt, but break this trend, run to 50, pull us back down to 40, 39 zone, and I would be buying. This class will be posted in the live class recordings. Not right away. We have another guy who does them. I'm an old guy. They've never taught me how to do it. But it should be posted by tomorrow. He normally does really good on it. If you can't find it, send me a message on Discord and I'll happily track it down for you. You need Adobe to die for Fake to go, huh? I mean, Adobe's dying. How much more do you need out of that thing? It's down 50%. It's pretty dead. Yeah, thank you all. Thank you all. Dirty River. Some Dirty River in the Discord. I'm Dirty Reindeer in the Discord. That's my bad. But it's technically Dirty River, but Dirty Reindeer. Yep, no problem. Okay, well, thank you all so much. Have a great rest of your night. We'll be back tomorrow, it's probably gonna be slow and just tag MMA, Nick, tell him you want one. Probably gonna be a slow VCs for me this week. I never got too crazy this last week. I just try to have a little bit of fun. But we will catch you all tomorrow. Thank you so much, everybody. Great turnout. Awesome questions from all of you tonight. I really appreciate it. And we will catch you tomorrow. Have a good one.